Hello, this is Dale. This is my stock market long and short-term outlook for April 1st, 2022. Again, my name is Dale Brethauer. I've been a trader for greater than 4 decades, hedge fund manager, been a guest speaker at a number of institutions. I've written 3 financial books, and I'm currently the founder and coach at www.optionsinfinity.com, where we specialize in credit spreads. There are 3 indicators that I use to help me determine my outlook, both long-term and short-term on the market. I also use these same indicators when I'm looking at individual stocks to decide whether or not I want to be bullish or bearish. The 3 indicators are the regression channel, measured moves, and Fibonacci extensions. The regression channel is established by the middle line takes in account all the price, 50% of the price will be below that line, 50% of the price will be above that line. And the regression line is an excellent trend line. Then if you take plus or minus 1, plus or minus 2 standard deviations of that, you can see whether the price of the stock, and in this case, the overall market, which I use the Standard & Poor 500, the SPY, is either overbought or oversold. When it becomes overbought, usually it will revert back to the mean, and sometimes it will overshoot and go back to be oversold. Then it reverts back to the mean, and it continues to do this on and on. That's the way the market behaves. It doesn't go straight up and straight down. It's like a sawtooth. Now, what's interesting about the regression channel is with the plus or minus 1 standard deviation, about 68% of all prices will be contained within that channel. And then the plus or minus 2, 95% of all prices will be contained within that channel. Here you can see the plus or minus 1 standard deviation, 68.2%. And then when you go to plus or minus 2 standard deviation, it's 95%. I also look at measured moves. A bullish measured move is one where the price is coming down, it makes a low, then it makes an intermediate high and pulls back, but makes a higher low. When it comes back here and makes a higher high, that is a confirmed measured move to the upside. It's called a bullish measured move. The classic definition of an uptrend is higher highs and higher lows. So a measured move will show the trend, and as long as you continue to have these, you continue to be in a bullish trend. Just the opposite's true for bearish. You have bearish measured moves when the price is coming up, it comes back, but it fails to make a higher high. It has a lower high, then it makes a lower low. This is a bearish measured move to the downside. Classic definition of a downtrend is lower lows and lower highs. Once again, as long as you continue to have bearish measured moves, you continue to be in a bearish trend. Now, once you have a measured move, you can go ahead and apply Fibonacci extensions. Well, this is a chart showing the measured move. You can see the SPY has come up. It has come back down. Then it made a lower high and then a lower low. Here is a measured move right here to the downside. Here's a measured move to the upside. You come up to an intermediate high, it pulls back to a higher low, then a higher high. This is a measured move to the upside. Once you have these, you can click, drag, click, drag, and click here, and this will give you the Fibonacci numbers. Fibonacci's are very powerful numbers. It was originally derived from Fibonacci, who came up with the number sequence, where in this sequence, if you take any previous number plus the current number, you'll get the following number. So 1 plus 1 is 2. If we go all the way up here, 13 plus 21 is 34, and so forth. Later on, mathematicians use this to take square root and square. And the reciprocal of that, we come up with the 1.27, 1.61, and 2.61, and these are used for extensions. These tell you when the price might be overextended. Using just these three tools, we can get an extremely good view of the market. Let's take a look at the SPY chart. There's two charts I'm showing here. One is on the left-hand side is the 1 year chart, and each one of these candles is a week's worth of trading. I use this to look at my long-term view. On the right-hand side, I've got the 3-month daily chart, and I use this to look at a short-term outlook of where I think the market is headed. Today, if I look at the long term, I can see that it has come down to the -2. Now remember, on the regression channel, the -2 and the +2, they're 95% of all prices will be contained within here. Yes, occasionally you do get outliers, but usually with an outlier, it gives you more indication that it's going to be pulled back to the regression line, reverting back to the mean. During this period, this is when we had the Omicron scare, followed by the Russian invasion of Ukraine, followed by the FOMC saying that they're going to be increasing interest rates, which are already extremely low. And the market tumbled. The market tumbled all the way down here. Now, however, my long-term outlook of the market remains bullish. As long as the interest rates remain below about 4.5%, 5%, there is no place that the large institutions, the banks, the hedge funds, can put their money for risk-free. Usually it needs to get to about that level, and they begin to move some of the money into treasury bonds, T-bonds, and so forth. Currently, they really can't do that with interest rates. So all the new money that comes into these institutions, they need to show a return, and the place where they go to is the stock market. As long as the interest rates remain below that level of about 4.5%, the market will remain bullish. I am bullish long term. Will there be corrections? Absolutely, absolutely. And we were in a correction right here. Okay, you can see that on the short term, when the market was up around here, we had a correction. We actually had a measured move right here. Came down to the 161 and the -2. What do we expect when it comes down here? Well, one, it's overextended because it's beyond the 161 on the Fibonacci, and two, it's oversold because it's down here. What do we expect? We expect a reversion back to the mean. Indeed, that's what happened. However, we have another measured move that occurred right here, came up to the 127 and halted, and came back down and tested those lows. But we had another measured move right here, took it to the 127, the -2, the brakes were put on, and up it goes. Now, what causes this to happen? And why is this such a good tool? The market is fueled by fear and greed. Fear and greed. And using these three tools, you get an extremely good view of the outlook of the market. Is the market overbought, oversold? Is it going to revert back to the mean? And it's the combination of these three that help me to determine where the market is headed. I have been bullish short term until just recently. About 3 days ago, we crossed over the 127 on the measured move, that the large measured move that occurred right here, and it came very close to the 161, and it's close to the +2 on the regression channel. That's usually an indication that we are overbought and it's time to have a correction. And you can see over the last 3 days, we're beginning to have that correction. I am bullish long term, bearish short term. Now, it's very possible that the market might come down here and kick back up a little bit and come back up here to the +2 and maybe have an outlier and then come down. But eventually we're at the level where the market cannot rise until it has a little bit of correction, gains a little bit more momentum, and pushes up. Therefore, I am bearish right now and will continue to be bearish as long as it's moving down, and especially if we get a measured move. Let me show you what that might look like. Right now, let's say the market is here. It would come down to, let's just say here, this is fictitious. Then it would come back up, and then it would come down. Okay, this would be a measured move to the downside, and if we had that, we can begin to put on a Fibonacci number that would show us how far down is the market potentially going to go. Okay, that data, once we have that, I'll be putting out another outlook to show what that projection might be. Currently, it has not made a measured move. I'm just alerting people that it is overbought at this point, and there's a very good possibility that the market is going to have a correction. How big of a correction? I don't know. How long will that correction occur? I don't know. But we want to keep tabs of it. We want to keep looking at this chart. And when I see something that appears like the market is going to either continue to the downside or maybe continue to the upside once it has a small correction, I will come back and give you another update on the outlook. Now, I hope everybody enjoyed this video. The track record for this strategy showing intermediate lows and intermediate highs is extremely high. If you'd like to be part of my YouTube channel and be alerted every time I do another one of these videos, all you have to do is click the green circle at the right bottom here, which we'll show in a second. And I also invite you to view the video on the right-hand side, on the left-hand side, and that shows you an example of how I've recently had a very profitable bull put spread on Google. Like I said earlier, we specialize at www.optionsinfinity.com in credit spreads, both bull puts and bear calls. We've been extremely profitable. I send out alerts, and if you're interested, go ahead and click on that video. I hope everybody enjoyed this video. Bye-bye now.